Hello, folks. Brandon Chapman today. It's another edition of the Theo Night video. Today for June 14th, 2021. Today's title is Big Bad and Bifurcated. So when you think about market bifurcation, it essentially means that the market's disjointed in terms of its movement. I can't think of a time where concern or expectations of potential volatility in the future have not been this high, and yet the market keeps rallying or inching higher day by day. While it's not necessarily a bifurcation, when you consider all the other ancillary data, inflation expectations, et cetera, coming to the fore, it really kind of creates a situation which is very curious. As we look at the market, they were up about 0.25%. Now, if we look at the VIX is also higher, which is relatively unusual to see a higher market and a higher VIX together. As we look at, for example, the SKU index on Friday posted a 159. What does that tell us? It just tells us that the market is pricing in significant downside potential. SKU basically means that we're expecting to see a higher frequency of small up days with the potential of a very, very long tail. Unfortunately, that tail is usually recognized with a very sharp downturn. So we're going to climb up the stairs, very small steps, and fall out the window. And this might be the highest level we've ever seen on the SKU index. While this is not necessarily all about pure timing, it's an indication of where hedging is, and hedging activity is significant. It's palpable. If we look at the VVIX today, we're ticking higher as, again, protections being bought. We're in that BAMA zone north of 110, where oftentimes we see it enter this area. It's indicative of call option buying on the VIX, which is pricing in downside potential in the market. As we look at some VIX measures like VXX, now this is a product I would encourage you to trade or the stock or options on, but we can use it as a sentiment indicator. When we look at the trade tab today on VXX specifically, it's the June 32 strike price for the June expiration. You'll notice out here about 7,900 contracts, mostly bought. So what does this mean? They're expecting the VXX to go up. Again, this isn't necessarily hugely predictive, but it is indicative of just the expectation here with the Fed announcement coming up on Wednesday. Something could start to go awry. So when we think about a bifurcated market, we're talking about disconnects abound right now. Who is the source of that? It's, of course, the Federal Reserve. They're going to give their policy statement. With all the inflation data that's come out, with all the other economic data that's come out, again, going one way or the other, we're at a point right now where Powell probably has the most important announcement of his tenure as Fed chairman. And what that means is what? It means that he has to kind of walk this tightrope where his measures that he's been pursuing are becoming less and less effective. And so can you continue to pursue that or up the ante as inflation's going wild? We're about to get the core PPI. We're about to get PPI tomorrow. Core PPI is expected to be up 0.5% for the month after last month's surprise of 0.7%. Can they continue to push the policy envelope while inflation's so high? This is the pickle or the conundrum the Fed is in, and right now Powell has to try to walk that tightrope. As we look at one last measure on the VIX, we'll circle back to that discussion. We'll look at VIX3M plus VIX ratio. This looks at front to back month volatility, or back to front. 3-month volatility compared to 30-day. This yellow line represents a ratio of the two. We're at about 1.23, which basically tells you what? The market is pricing in higher volatility out at 3 months than it is at 30 days. Okay, so you couple that with the VVIX crossing above 110, high degree of skew, very low VIX. We're setting up right now for a possible correction here. Normally I look at 5 to 10%, but in this market environment, it's so unpredictable because the policy has never been more greater as far as the expansionary and inflationary policy that they have pursued. Other announcements we're going to see tomorrow is core retail sales. Last was minus 0.8%. The analysts are looking for an increase of 0.4%. So we'll see. Is some of the hangover, again, that buying spree that we saw with some of the stimulus provided by the federal government in forms of stimulus checks, is that going to wear off? We'll see. Do we start to see a disappointment? And industrial production. Last was 0.7% increase. Expectations are for a 0.6% increase. A couple weeks ago, we had Conference Board. They gave their consumer spending intentions for the next 6 months. They saw homes, autos, and appliances down big from the prior month. In fact, homes were the lowest since 2000. Again, it's the lowest in the data set that goes back to 2000. Same with appliances. It's the lowest since the data set around 2000. So we see significant drop in consumer buying intentions in the next 6 months. Autos dropped also very substantially. So we have homes, autos, and appliances at the bottom of its range over a many year period of time. And again, we talked about this bifurcation. Auto stocks like Ford, et cetera, have done very, very well. On the prospect of what? People saying, hey, I think I want one of those electric Ford F-150. By the way, I don't have any clue how much it's going to tow in terms of how it might affect battery capacity and mileage. There's so many unknowns there, right? But all they're doing is putting an intention to buy, not exactly buying one, right? So we'll have to see how this plays out. But this is a big, big drop, and we're starting to see a little bit of a lag right now or a drag on the market. And home prices, I mean, just think about Blackstone out there buying a bunch of these homes, single family homes, renting them out, buying with zero interest rate, Fed money. It's kind of infuriating, right? As you think about some of this stuff. But anyway, let's get back to the markets here. So we have this situation where the market is moving higher, and we saw today that yields also moved higher. TNX was up slightly. We saw the curve steepen slightly. We look at TYX, it was up about the same as TNX. And so we're seeing that long-term interest rates are starting to rise on treasuries. But here's the thing. When we think about the Fed and what they might have to say coming up on Wednesday, some of the things that they're buying are mortgage-backed securities. Another thing is TIPS treasuries. And another thing, of course, is just your standard treasuries like we're seeing here, 30-year, 10-year. You might be buying shorter than that. But here's the point, right? Maybe they're not going to pull back on the amount of stuff they're purchasing, right? They might be just kind of pulling back on some of the areas that they are buying. So, for example, mortgage-backed securities and Treasury inflation-protected securities. Do they start to pull back on those and emphasize more the Treasury market? Well, if you look at what happened Friday to AGNC, this is a REIT that buys mortgages. Dropped significantly. It was down a little bit today. You look at NLY. Again, dropped decently on Friday. Was down again today about close to 1%. Is something going to happen in the mortgage market? You think about bifurcations. What you're seeing right now is that looking at the 10-year at 1.5% as high as 1.75 and seeing that the 30-year treasury yield's below 3%, that seems to be relatively kind of artificially low, right? The risk spreads in mortgage bonds are just not there. Do we see them start to widen out? Secondly, right, for example, let's look at TIP plus IEF. This is tips against treasuries. You'll notice for the first time in a really, really long time, this yellow line represents the ratio of tips and a 7 to 10-year treasury ETF. What we're seeing is this breaking down for the first time in a very, very long time, where all of a sudden inflation expectations, at least priced in with these two products here, is starting to diminish. Again, is it caused by the Fed not buying as many tips as they were previously? Is this reflective of kind of a diminished inflationary outlook? Okay, so let's talk about how this is affecting banks. So for example, we look over here, you'll notice the second to the last performing sector, down 1%, was financials. That's the S&P 500 sector ETFs. You look at the worst performing stocks on that on the S&P 100, for example, you'll notice we're littered with financial stocks. Again, very, very unusual given the fact we're seeing treasury yields rise today. Is that just transitory? Are we going to look for a continued flattening of the yield curve? That's a very real possibility. And so we look at some of the activity today. Jefferies, JEF, we're talking about a very, very narrow consolidation. Where basically the high and low has almost been the high and low over the course of the last several weeks. Today, what came out, what happened on the July $30 strike price, there was a lot of put option buying today at the July 30. What does that show you? There's some expectation, some money out there being placed expecting Jefferies to break down. And by the way, they have earnings coming up around the 28th. We've got KRE. This is a regional bank ETF. Regional banks are ones that do a lot of the lending, right? Versus your money center banks that do other stuff. Well, KRE is down today. We're starting to break lower. In fact, we took out our low from May 13th today. As we look at the trade tab, we examine the activity further. As you look at KRE, it's a 25 June. Where are we here? 25 June. We're 67 put option against 38 open interest. So 5,000 contracts traded, 38 open interest. Most of that looks like it was mostly buying activity. So buying puts is bearish. Expectation $67. Again, not much lower than we're currently trading. But again, it's reflective of that bearish bias that's kind of building here. And you notice the volume on the down days most recently has been relatively high. We look at XLF. This is one where you're seeing kind of a disjointedness, bifurcation, right? We look at the trade tab in here, and it was for the June expiration. A lot of upside calls being bought for this week at the 37.50, and yet we look at the just a week down the road here, or sorry, 2 weeks down the road, on July 2nd, you notice 10,000 puts traded there against 78 open interest, mostly buying activity. Got 5,000 contracts to the 35 strike, and what's happening now? We're starting to see some downside activity opening up here in conjunction with the upside. So maybe we get a blip here intra-week, but again, what is that? Maybe it's some shorts. I don't know, but the idea is that with XLF, what you're seeing is a very disjointed picture today playing out in the options market. And you think about the Fed and their impact and the periphery around that. Well, think about, for example, Bitcoin. So Bitcoin did find some significant support today. It was up about 6%, maybe breaking out of this little consolidation phase that it's been in. Well, if we think about that, guess what happened as well? We're seeing bullish interest come into Coinbase today. It was a 245 call for June. So this week, just a little bit out of the money, but pointing to upside expectation in coin. You saw it in Mara as well. It was up about 12% today. For Mara, it was the 25 June $30 strike. Again, pretty close to where it's trading currently, but it's reflective of that bullish interest, although we did fade off our high today, but we did have above average volume. And then you also see that companion stock in Riot. Again, up today, did fade from its high as a June 40. This was slightly out of the money. And again, what do these companies do? Riot and Mara, they mine Bitcoin. They're not great long-term prospects. The fact of the matter is the margins on that in a higher cost environment has not been great in terms of profitability for these companies, right? But they do have a tendency to move with Bitcoin. Bitcoin's higher today. And it was not just Bitcoin. For example, GLD dropped significantly, right? But we were able to rally off the lows and find a nice little bullish belt hold pattern. And we've seen that at these kinds of moments, oftentimes we've seen some coincident bullish option activity come in. Like, for example, go back to February 4th right here. We got a nice rally out of gold for the next week. We also saw it, for example, on March 8th. Today, it was the 30 June. It was the 177 strike. So up here, looking like we may have a chance of retesting in the near term our prior highs up here, maybe even more depending on how the Fed statement plays out. Also, you look at SLV. SLV gapped a little bit lower in the open, was able to rally throughout the day, finished very close to Friday's close. On silver was actually even more bullish, more stretching out here. It was a 30 July $31 strike. Now, gold typically performs well in a stagflationary environment. Silver does well in an inflationary environment because it's more of an industrial focused. So we have industrial production this week. We have the Fed statement. Could it come together? And could we see a breakout in silver pushing towards 31? Again, a lot of coincident activity with silver, gold, and again, Bitcoin and Bitcoin miners specifically in Coinbase coming up. Again, very interesting. As we think about the S&P, now, I'm not so sure the market's necessarily going to sell off, but the risks are there. You see people hedging. But the fact of the matter is, if the S&P is going to go higher, there are certain stocks that are going to outperform, and that is Apple. That is Facebook, right? Apple happens to be one that was a bit oversold. And last week we put on our list here, to my top-down Friday watch list, because of the bullish interest and the fact we're at support, playing out this theme of the potential the S&P may grind higher in the near term here, and Apple having to kind of take the charge there. Apple today saw some significant activity at the 25 June $130 strike price, over 24,000 contracts traded. So again, It's a big activity, just indicative of this kind of bullish upside potential here in Apple. Apple ended up finishing almost 2.5% higher. So I'm looking at this potentially retesting the prior high back here. But again, it may go higher if the market continues to trend in a good way. Anyway, that's today's video. So we'll wrap with Apple there. But anyway, we'll see you back for another day. Brandon Chapman, again, this is a Theo Night video, June 14th.